Crypto Hotep here with another investing video. We are on week 108 of the family portfolio and dividends tracker. Thank you guys again for tuning in. I'm going to see if I can get this video down below 20 to 19 minutes. I want it below that. And we're just going to kind of run through the facts here and get to the good stuff. Before I do, anything that we state on here is not financial advice. If this is your first time watching a video, do yourself a favor and do myself a favor. Go to the channel, go to week number 1. First, subscribe and hit the notification bell, but go to week number 1, and that's where I give you a breakdown of what I'm doing with my family here. And basically, this is like a trading journal. Every week we go through our family portfolio from companies that my family chose themselves, and we go through market events, how we're feeling about the markets, and it's basically just to journal our family investment journey. If you like these videos, feel free to like, subscribe, comment. Also comment on what you guys are investing in currently and if we're investing in the same thing. But again, none of this financial advice. And with that being said, guys, we can jump right in. Before we go to week 108, we always look at the week in review just to see what happened in terms of news events. So this is going to cover May 11th through May 19th, 2026. So the S&P closed near 7,444, new record highs. NASDAQ also hit 26,402. And Dow Jones hovered around 49,693. Even though we're talking about stocks, Bitcoin is always part of discussion. So it traded around between 80 and 82,000. Early, strongest opening in months on May 11th, before settling near 81,000. And Ethereum did jump up between 2330 and 2369. Now, since then, crypto has dropped. But again, we're looking at May 11th through May 19th in that time period. So some impact or high impact news here. So April CPI was released on April 12th. Okay. So it was in line with consensus, I should say. And it was up or month over month was in line with consensus. And it was up 3.8% year over year. So up from the prior numbers. Okay. And mostly this is due to the conflict over the Middle Eastern conference with Iran. And some of this has to do with energy costs, i.e. gas going through the roof during this conflict that's going on right now. Kevin Warsh is confirmed as Fed chair. So this was May 13th. Senate voted 54 to 45, closest in modern era, mostly party line with one Democrat crossover. So Warsh officially took over May 15th, or post May 15th. So Jerome Powell's last day was last Friday. But he still will stay on as governor. Okay. So that's something to keep in mind here. Iran ceasefire tensions ongoing. Again, nothing. It's like Groundhog's Day. So U.S.-Iran conflicts are still going on. Trump, the administration, and the White House did reject Iran's proposal. And I believe that they also captured one of Iran's boats with 1 million barrels of oil. I think that was today as well. So things are still going on. Again, it's day by day, week by week with this whole Middle Eastern conflict going on right now. Q1 earnings and tech momentum. We did have some strong earnings from Cisco, Alibaba, Applied Materials, and Chip. And then S&P earnings growth remained robust, 12 to 14% year over year. That's good, right? That quote unquote means the economy is doing well. These are all in quotations though, because the economy is not doing well, right? But the smoke and mirrors are the markets that we invest in. So again, some of the people that are feeling the pain of the economy, but not as bad as the normies, are the investors, because their money is growing over time, essentially beating inflation. And that's what we always want to do. Other data and notes, jobless claims were around 210,000, which show resilience. And then consumer confidence edged higher in April. So events to watch and some things to keep in mind. So between May 20th and 21st, we have initial jobless claims. So this week, we also have housing starts. This week's going to be somewhat a very quiet week. Late May, we have more Q1 earnings, including NVIDIA. NVIDIA actually reports Q1 earnings tomorrow. So that's going to be huge for the AI play and all of that. One thing the AI or Grok didn't highlight was Trump administration going over to China last week with a lot of the CEOs of the tech firms. So, Tim Cook's from Apple, Jensen from NVIDIA. So all of these CEOs actually got together with Donald Trump and went to China to broker deals and make, some deals happen, which was a once in a lifetime type of trip. I don't believe any other president has ever done that. So, but again, you're dealing with a president who's a businessman first, and that's typically how you close deals down. You get in person, and you bring kind of all the fuel with you, and that's literally what Trump did. So another thing to keep in mind, June 17th to 18th is the next FOMC meeting, which will be the first full FOMC meeting under Kevin Warsh. That's going to be very volatile. Okay, so rate decision will be included with that. So everybody's going to be keeping their eyes on what Warsh is going to do. Is he going to fall in line with Trump, who said, hey, cut rates? Or is he going to continue with Jerome Powell's last decision, which was to keep everything kind of as is? This is going to be very, very volatile and instrumental with what's going to happen in every type of market. So June 17th to June 18th. And then ongoing, obviously, Iran and the U.S. ceasefire developments and those type of things. Okay. Again, one other thing that we do is we also go through where we were last week. So at 107, our family stock portfolio saw a balance of $4,293.51. Money weighted rate of return year to date of 4.07%. Market gain of $146.75. And then dividends earned of $15.53. So what happened for 108? Well, let's see. 108, we have hit another milestone, guys. So our balance is $4,346.64. Money weighted rate of return of a 5.39%. Dividends earned of $18.64 and a market gain of almost $200 at $196.83. Look at this chart year to date. This is literally investing. If you could picture investing as a whole, this is what it is. Hey, everything looks good. Oh no, it's over. Everything's over. The market is just terrible. Oh, everything's good again. Oh, we're boosting. We're going up. This is literally investing as a whole, and that's why you have to have a strong stomach. You also have a strong mindset when you're putting your hard-earned money in here. So we did cross 4,300, new milestone here. We're just keep it on here. And I always we'll look back at a year. Where were we at a year? Let's see. We were at $2,341.02. So this time last year, we were a little bit over 2,000. We are over 4,000 right now. And look at that weighted rate of return 1 year. That is fantastic. All right, so let's see what happened between this week and last week, as we always do. So we did have some dividend activity. So we got some dividend payments from Apple. We got some dividend payments from AbbVie. We got dividend payments from our income machine, Old Realty Company, 73 cents here. Costco, 90 cents. Again, if this is your first time watching the video and you're like, Crypto Hotep, these aren't even $1. What's going on? Remember that, when you're dividend investing, it takes time to build these dividends up, and it's like a snowball effect. So what we're doing is we're focusing on the act of receiving the dividends and building our positions up, knowing that this is going to take years of building and just putting money into these companies. That's why we've done the research in these companies, and we feel very strongly and we feel good at holding these companies for years on end. Okay. What did we buy though with those dividends? We did buy some Waste Management Group. So we bought Waste Management with those dividends. And that's about it. We didn't have a contribution for last week, so it wasn't a contribution week. So there was no money added to this. But as always, guys, let's go check out the portfolio because we did increase. So portfolio bottom to top. Unfortunately, my wife's at the bottom here, and her balance is $615.86, which is a money-weighted rate of return of a negative 1.65%. Dividends earned of $1.60, and then a market gain of a negative $11.48. I can tell you right now, the culprit, double-digit negative growth, is Celsius. So Celsius has been tanking as of late. It's a very volatile stock, Celsius is. We've been through this before with my wife's portfolio in Celsius. Celsius can be the crowning achievement on her portfolio, or it can be her Achilles heel. You kind of have to ride the waves with that. So right now we're riding the waves down, unfortunately, over negative 30, almost 37% in the red on Celsius. However, nothing has changed fundamentally with Celsius. So we're not dropping it. We're selling it off, nothing like that. But, just keep that in mind when you have these volatile stocks. You have to have that strong stomach and that strong mindset, and it pays to research. The other thing here, let's go top though. Google's up over 22%. You can't make that up. They said Google was washed up. When OpenAI and ChatGPT came out, they said there'd be no more use for Google. Guess what? Google still has billions and billions of users across like 5 products. They just produced some stats, and I can go over them next week, but the stats for Google are just staggering. It's not going anywhere, and it is a definite AI play. Pepsi's still up in the green, up over 5.5%. Microsoft is down. We're still trying to build our position up with Microsoft, and then Tesla's down as well. Overall, that's if Celsius was up at least maybe half of what it is right now, my wife's portfolio would be in the green. Shoulda, woulda, coulda. Everything's fine right now with her portfolio. That's just how it goes with that very volatile stock. Let's go to our youngest. Our youngest has $654.40, money-weighted rate of return of 8.79%. Dividends earned of $2.15, and then market gain of $48.67. So here we are with Costco. Costco up over a staggering 27% year to date. Money weighted rate of return. Starbucks up over 27%. That's amazing. So you got Celsius that's down 36%. Costco and Starbucks, probably some of the most boringest companies in the world right now, they're up over 27% year to date money weighted rate of return. Apple's in double digits now, up over 11%. But Sony's down a little bit, as well as we talked about Tesla with my wife's portfolio, and the same goes with our youngest here. Okay, let's go to our middle. Our middle has a balance of $669.12, money weighted rate of return of a staggering 17.85%, almost 18% year to date, guys. Our middle portfolio was probably last year, was in last place last year for many, many months, and it was in the negative. Why? Because Target was bringing it down. But guess what? And I said this, Target was on the come up, and they are proving it so. So Target, biggest holding, up over 32% on Target. Amazon up over 14%, Costco up over 27%, Google, as we talked about before, up over 25%. Sony, unfortunately, is down. It was down in our middle, down in our youngest, so it is down in our middle. But Starbucks up over 27%, and Tesla down over almost 8% here, just like our youngest. Very good portfolio here. It's kind of like, when you're investing into companies versus ETFs, sometimes it pays to pick those right companies. It also pays to diversify a little bit more. So I'm a fan of both. I like ETFs because it makes investing easy, but I also like my stock picking, especially for our family portfolio as well. So, all in all, a fantastic portfolio from our middle, just amazing performance. Let's go to my stocks. My stocks have a balance of $1,192.18, Money weighted rate of return of just 0.99%, market gain of $3.24, dividends earned of $8 though and 19 cents. So technology is coming back on the come up here. So one thing I did do is I did adjust my allocations. So my target, my actual and target right here in the far right column, I upped technology to 25%. Why? Because I feel very strongly about technology. I feel very strongly about my two holdings in technology, which are just Google and Microsoft. These are buy and hold forever stocks for me. And I've seen what they've been doing in terms of AI and being nimble and knowing when to pivot, when to partner with companies instead of like making their own tools. And both of those companies are fantastic in my book. Again, not financial advice, but I upped my allocation to 25%. I lowered my allocation of finance to 15%, and then I kept everything else the same. Okay, just to make up for that added 5% there. Finance is down, unfortunately. We got Visa and Moody's. Right now, the financial industry is trending lower. Industrials and energy is down over 3%. Real estate, that's the O Realty company that we got that dividend payout from. We're up over 12% on them. They are my income driver. Consumer staples and shopping, that's Costco and Lowe's. We're up over 10% there. And then pharmaceutical is just AbbVie. We are down almost 5%, but I'm completely fine with AbbVie and holding that. In restaurants and food, Coca-Cola and Domino's Pizzas here, we're down almost 5%, which makes sense. Domino's Pizza's having a hard time with the struggling economy right now, and people kind of pulling back on what they spend out to eat and fast food. So they're trying to swim through those waters. Okay. And then our last but not least is our Otis, holding that top spot and also cracking a new milestone, $1,200 plus $1,215.08 in our Otis portfolio, up over 5.84% money weighted rate of return year to date, market gain of $62.47, and then dividends earned of $3.13. Again, the most simplistic portfolio that there is, but again, those are four solid companies, right? These aren't fly-by-night companies. We're looking at Apple, Costco, McDonald's, and Tesla. Tesla we spoke about in our youngest and our middle, with it being down over 9.5%. Same thing here. McDonald's down over 7.5%, but guess what makes it up? Costco, right? Costco is always going to Costco. No matter if the economy is up or down, it's probably one of the best stocks to just hold. Again, not financial advice, but it is a sound company. Plus, that $1.50 hot dog combo is not going anywhere. And then Apple up over double digits on Apple. Great milestones here. We hit a milestone with our family portfolio, and then our oldest hit a milestone in their individual portfolio. So you love to see it. So week 108 has us with a balance of $4,346.64, cracking $4,300. Money weighted rate of return of 5.39%, market gain of $196.83, and dividends earned year to date $18.64. If this video was helpful, guys, feel free to like, subscribe, comment. If you don't use M1 Finance, the link will be in the description below as well. Share this with whoever you want. And again, and as always, guys, thank you and happy investing. Oh, I tried to get over less than 19 and we just got 19. All right.